enabled. Standard Chartered and CNBC-TV18 present India on the Move, Season 6.
Hello and welcome to Season 6 of Standard Chartered and CNBC-TV18 present India on the Move. I'm your host Gautam Srinivasan, and our topic of discussion for today is recalibrating trade finance for the post-COVID-19 world. Joining me are three leading voices from the industry to talk about trends, challenges and solutions shaping trade finance. Our lineup features Manish Kumar, CEO and founder of TradeX, Ram Iyer, founder and CEO of Vayana Network, and Gaurav Bhatnagar, MD and Head of Trade for India and South Asia at Standard Chartered Bank. Gentlemen, thank you so much for coming in. Lots of things to discuss. In business, as they say, there's ebbs and flows, but when we talk about the economy and trade, it's high tide and low tide. And speaking of the low tide, during the pandemic, 13% decline in the global GDP. And then in 2021, we see a 5.4% or 5.6% growth, which is the fastest in nearly 50 years. But I want to understand the imbalance that this has caused, because a lot of the advanced economies, they're actually exceeding their pre-pandemic output levels, but a lot of the developing economies have years to catch up. So what's the side effect of this imbalance? Gaurav, let's get your views in first.
So as you rightly said, that there has been a lot of changes happening in the world of trade. And you have seen many countries, who are having issues in terms of their FX. Several countries have restricted the imports to manage the overall FX positions. So that's one of the biggest impact on the weaker side of the economy. But coming to countries like India, we are seeing a significant ramp up in the overall request for trade financing. And another thing, and obviously COVID has really changed the priorities, and the biggest priority now that we see of the clients is to bring a resilient supply chain. And when I say that, then they are trying to leverage technology, trying to look at rebalancing the supply chain. If I were to take you back to 1400 year, right? And if you were a cargo owner and you are shipping a cargo, you would hand over your goods to a shipping company and you would get a paper. Fast forward 2018, you're doing the same thing. The world has changed. 30 years of internet, you're doing the same thing. Fast forward another 3 years, post-COVID, people realize the importance of digitization, working from home, security, fraud aspects, everything. We see a huge emergence of electronic BL companies coming. And there's a lot of adoption of that. Many corporates, many clients are asking us to evolve into EBL. So that's a big shift which has happened. And again, this is linked to a resilient supply chain because they want flexibility. They want to buy cargo from anyone, and having a EBL kind of thing helps you. And we will talk about many more options.
Absolutely. We'll expand on that. Meanwhile, Ram, let me get you to comment on this. As Gaurav said, the world might have changed, but some things are the same. So in terms of the side effect of this imbalance, the positive and the negative side effects, in your opinion?
I think the positive side effect obviously has been, I think there's a lot of talk now about efficiencies. So I think there is a tremendous need. The consumer world efficiencies are kind of coming onto the trade world. So I think that's, and because of COVID, as Gaurav very correctly said, I think there's a lot of digitization that's happened. So that's all the positive signs. I think the negative signs is that we are also seeing a tremendous shift in multiple things happening at the same time. I don't think we've ever seen that before, whether it's giant powerhouses of manufacturing like China, now slowly manufacturing shifting away from there. We are seeing climate change, we are seeing wars, and we are seeing a lot of economic crisis right now. And I think that's going to have a very interesting play on what you said first, that the disparity between the really rich and the really poor is only going to widen in that sense. And I think this idea that a pandemic opened up those natural disparities, widened it. But the fact of the matter is that they were always there. And so I think what we really have to figure out is really is the digitization is going to help the weaker countries to kind of become more efficient, faster, and be easier. So if you look at Vietnam or Bangladesh, for example, there have been great stories of success in the entire manufacturing and trade space. How many more such countries, especially in the African continent, can you kind of build up? That would be an interesting, I think, if at all, I think a result we would like to see out of this whole thing, because otherwise just, India obviously has to do very well, and we will kind of all work to do it well. But, I think there's all these small countries, I think, are the key real interesting stuff. But fundamentally, you're going to see we all talk about nowadays in the blockchain world, decentralized, distributed. I think you're seeing manufacturing getting decentralized, distributed, supply chains getting decentralized, distributed, and I think that's a very, very interesting facet of this whole game.
Two contrasting reports, right? The Future of Trade 2030 report, which Standard Chartered released during the pandemic. And after that, there is another report post-pandemic, which focuses more on supply chain resiliency. So take us through the trends which are happening on that aspect.
Financial robustness of supply chain has always been there. And we as banks, we have been doing supply chain financing, but it has expanded a bit. And now corporates are also looking at deeper tiers of supply chain, which was earlier just focused on your near-term kind of tiers, which is just a direct supplier. But now you also want to look at indirect suppliers. The second thing is around having a environmentally supporting and transparent supply chain. That's a very important factor. You have heard of United Nations Sustainable Development Growth and Climate Accord of Paris and all these things. There's a huge importance and huge commitment all across the industry on sustainability, on eco-friendly, and that's where having a green supply chain is a big emerging trend. And the last one is flexibility and adaptability, nearshoring, friendshoring. You can have a supplier in a country, but the country is not friends with you. So all those things are playing a very important part in terms of rebalancing and bringing the resilience back.
When we look at the figures, right, the global trade financing gap, that hit its all-time high at $1.7 trillion in 2020. So Manish, I want to know from you, considering, that the segment of SMEs gets the hardest hit when this happens, and we are still in a phase of global economic uncertainty. So I want to know how, say, banks and fintechs especially from your side, how you kind of are helping in closing that gap.
See, I think because of the pandemic, one thing what Ram has said, and it possibly gives a good level playing field to everybody, is the digitalization, right? So when earlier the large companies has a lot of muscle power to roam around things, now it's more about how digital, how much agile you are to adopt to these technology. So it gives a lot of level playing field to even a smaller companies to grow faster, right? So what will happen is a lot of these MSMEs who will adopt to these digital technologies, remote working, remote everything, right? They will grow much faster than your usual giants who is taking years to change, right? So a lot of these things will start coming up. Fintech like us love those kind of company because everything, we are digital, they are digital. It's like a natural merger of, just merge the data and do everything together. So in that way, it's going to be a much delta on top of what these guys are doing. From a trade finance perspective also, what is happening is when we are taking these MSME, the data is free flowing, right? So earlier the problem of fundamentally the trade finances, the data is not there, right? So when data for a large company, listed company is publicly available, the data for the MSMEs are not available or are not reliably available. Now all this data is available, right? So when the data is available, everybody is coming and saying, hey, I can also underwrite, or I can also bid. And that is where the alternate investment also pitch in, where companies like us will come and say, hey, is the source of capital is always banks, or can be source of capital could be somebody else, right? And that is where the trade finance gap can diminish a lot more for these MSMEs.
Bringing the wider ecosystem of investors into this trade financing space, because the lack of digitization and automation, that has been cited as the reason why, while being a low-yielding, low-risk asset class, it's still too costly to distribute. And capital market participation, that has also been hampered because you need to repackage this portfolio, relook at risk, so to say. So as a lot of the players go digital first in this ecosystem, are things going to change significantly, Manish? Trade,
always I call it as a double hook product, right? So it's a one hook to the guy whom you are supplying and then another hook to you. Now, if I take into both the hooks, right, I'm getting like from a startup perspective, you can say my CAC is reducing because I get one customer, I get the another hook free of cost and the other hook comes, right? When I get this person, his another hook is also there. So if I go to, let's say, OEM, I get the tier 1 supplier, from there I go to tier 2 supplier and so on and so forth. If I connect all these network or this chain, I know who is supplying to whom and who is finally responsible to whom. If I get this data up into the market and I say, hey boss, this is the data entirely there, right? So even if this is a small, let's say, a ball bearing supplier, but it's fundamentally his ball bearing is going to this guy who is doing a gear manufacturing, to this OEM, to this large company, and this is how the connection looks like, then I don't think there is a problem for anybody to underwrite it, right? So fundamentally what digitization is going to remove is the emotions and a lot of biasness that was earlier in terms of it, right? So once the data is there, evaluate the data and take a call. Once this will start happening, then a lot of things will start happening, right? So recently, for example, there is green bonds that has comes up in trade. There are a lot of new kind of securitization deals are coming up where a lot of AMCs are also trying to participate. So that will open up a larger chunk of new people coming up. There are a lot of PE funds who are putting up like billions and billions of dollars in trade supply chain finance. So definitely it's going to open up the market, and that means that the cost of capital is going to reduce and more MSMEs is going to get funded.
Absolutely. We'll put a pin on that. But before that, it's time for us to take a very short break. But stay tuned, as on the other side, we have a very interesting discussion lining up.
Standard Chartered and CNBC-TV18 present India on the Move, Season 6. Standard Chartered and CNBC-TV18 present India on the Move, Season 6.
Welcome back to the 6th season of Standard Chartered and CNBC-TV18 present India on the Move. Of course, the topic of discussion today is recalibrating trade finance for the post-COVID-19 world, resuming our discussion on what's next for trade finance products. Because Ram, I want to come to you, get your thoughts on this, because we had Manish and Gaurav sharing their views. We're seeing a move towards supply chain finance instruments such as, say, receivables discounting and inventory financing. So what's the step ahead? And more importantly, is worthiness of capital going to be a key factor for a lot of the players in this ecosystem, the enablers in the ecosystem like you and Manish do, when it comes to taking your business to the next level?
Yeah, so I think we should just put some perspective to this whole demographics, right, of businesses. I think we have this very large businesses which are very credit worthy. Then we have a lot of businesses that are credit ready, which hopefully with digitization we will get more information and we'll be able to kind of get them onto credit. And then we have a whole bunch of them who are credit ignorant. And I think there is a lot of work to be done on getting the credit ignorant to be credit ready. And the ITFS is, I think, a huge revolution in that regard, because it's actually one of the first times you are having a regulated cross-border financing platform, which is not limited to Indians. It is limited. It can be any exporter, importer anywhere in the world getting access to the best institutions for best rates. So I think we are going to see some democratization of that entire cross-border side, which hitherto was kind of limited. But I think the interesting thing that's really becoming up is that credit is becoming like a credit gateway, just like payment became payment gateways, right? And I think this whole concept of what now is fashionably called embedded financing, trade financing, I think is becoming more central to this whole theme, that if you can marry the trade commerce that is being done with the credit at that point where the trade is being done, do you kind of open it up even further?
So from embedded finance to embedded commerce.
Embedded commerce. So I think that's going to be an interesting one. If you look at ONDC that's now launched out in India, you're going to see OCEN coming along with it. So I think there are a lot of those thought processes that are happening. Obviously, all of them will take time. It's not like tomorrow we are going to suddenly see everybody being, we being embedded into commerce and everything. But I think that India is a great crucible right now world over for how public infrastructure can speeden up a lot of the inequities that you talked about. We are seeing incredible amounts of data getting pumped in, GST, invoicing, account aggregators, PCR, hopefully when it comes in public credit registry. I think you are now going to see a lot of that stuff only happening in India. In fact, one of the big problems fintechs like us now have is that we can't go overseas.
You don't have a reference point.
We don't have it because India is so advanced that it is actually, you find enough, like you feel like you're going to a backward country even if you go to a US, because you don't have that kind of infrastructure, APIs available that we just assume is standard.
Gaurav, your thoughts before that on the trends shaping up on the demand side for trade finance products?
Yeah, on the demand side, we see a lot of SMEs getting, entering, and startup environment being there, and government policies anyways are being there. So there is a demand coming. Obviously, it's a function of overall GDP growth, which is happening. But the good part is linking back to your earlier point of credit worthiness. How is that getting better? And that's where technology is helping these new companies, MSMEs, and startup getting a better credit profile. Because gone are the days when financial analysis and limit setting is done based on your financial statements, which are like at a point of time once every 12 months. Now it's a flow-based funding. And that's where, whom do you sell to? What is your rejection rate? What has been your past performance? What is your length of relationship? All these things are becoming very important. Financials are very important, but these things are becoming equally important when they can get access to a finance. And a lot of new models are getting created. For example, the China model that I talked about, wherein we are able to decentralize and bring the payment obligations down. That's a case wherein you are able to replace the financial risk of a tier 3, tier 4 level supplier by a top grade car manufacturer by using technology. And that is how you increase the credit worthiness of these entities who can have a much more democratic participation in the economy and in trade financing.
That's the ideal scenario. But coming back to the point that you mentioned, Ram, about these islands of excellence, the issue is that in solving these near-term challenges of trade finance with technology-led innovations, the risk sometimes is that these innovations could result in islands of innovation being created which address very niche pain points, whereas the need for the ecosystem is a more open approach. So your thoughts on that?
So I think, there are some very interesting experiments happening, but let's just take, blockchains, for example, because we talked about blockchains earlier in this segment, right? A lot of the problems with blockchains right now is they're not portable. So I can't be in one blockchain and port my data to another blockchain. It's not simple, right? So it's not that technology has suddenly now become decentralized or distributed. And I think there's still a lot of work to be done to get there. But I think one of the directions where India has set out, and I will again come back to the India example, is that we are at least thinking in terms of how to create ground up federated, what we call protocols, right? Distributed protocols. And I think that's a very, very interesting experiment, because now you're saying is that the connections between all trade, the people who can participate in trade are not going to be bound by one equivalent of an Amazon or a Flipkart or whatever it is. It's going to be actually spread across. And I think that is going to be a very, very interesting thing where anybody can step in. Like trades is a good example, right? In trades today, every bank can come in and give out a loan. Previously, they would have to go and acquire a customer and everything else. Now they're actually getting an ability to go and directly finance a supply chain asset. I think the same thing ONDC is going to do by making commerce that way. So I think there is an non-island movement happening where everybody is kind of getting to a Pangea kind of geography evolution where everything is kind of coalesced. But I think it will always be a fight. Because look, at the end of the day, honestly speaking, for startups like ourselves, it is always nice to have a walled garden, right? Because then you can dictate who comes in, pricing and everything else. It is not really in your best interest to say it's all open. The trick is really now it's getting forced to be open. Because the expectation is it will be open. People expect that you should be able to kind of move from one to the other. How do you deal with that? I think it's going to be an interesting challenge for startups like what Manish and I do. Directionally, I think where we are going to is that you have to start building more and more sophisticated applications rather than look at how to control the data. And once data becomes non-islanded, like what Manish talked about, right now data is available, free, and you can start taking it, then you can start creating any kind of interesting applications. The bar is going to get set higher for people like us. I don't think as Indians, we have really appreciated the fact, and while we read about all this and we think we have done well, is how far ahead we are. And that's only when you go abroad and look in and try to actually use a payment system or something else, you realize, man, we have come into dark ages if we are in this country. We should go back to India. So I think a lot of the, issues of yours, there's a lab experiment going on right now to change that. If that proves successful, I think we'll show the world a way.
Manish, your thoughts on this, on bridging these digital islands?
I don't think this will happen. See, UPI also when came, right, nobody expected it to be like literally this, right? You can go to a street vendor and he'll give you a QR code and you just scan. Everybody thought UPI, India stack, everything like, two big buzzword, Aadhaar stack, all those things. But now we know what is UPI. I think trade is something which is between payment and lending, right? Because it's a part payment, part lending kind of thing. So I think trade is the next, which is going to be immediately impacted with this entire digitization. What also trade finance and all these new initiative, ITFS, trades are doing is it's putting the control to the opposite side, right? So earlier what used to happen is as a customer, as a borrower, I used to go to the bank and maybe 2 banks, 3 banks, 5 banks, and then banks will give me some rate, right? So that's my end. And there is a study by RBI which says that if people will basically spend more time on their business rather than on finance, their profitability will increase by 20%, right? So there are people who are spending time on this. Now with trades, now assume I put my invoice and then there are like 50 banks and FIs are bidding for it. And they're saying, I'm better. And I have talked to some of the banks who said that I don't mind giving them a 4% rate or a 3% rate. For the first time in my 20 years of banking career, I've started hearing people in domestic trade talking about LIBOR rates, right, which is unheard of in India, right? So this is all happening because of what Ram says is the democratization of the entire trade finance, right? So this will eventually happen. Now the question is whether this will be a UPI moment for lending or whether it's still how far we are from that. Can we make it like literally like I take an invoice and take a picture and tuck, and somebody immediately send me, here is your rate. So you are not even paying, somebody else is paying, a bank or FI is paying to you. We still need to see, but I think this will definitely not become an island of innovation.
While it's great, but there are still some challenges, whether it's information gaps or the lack of standards. So how do we overcome these challenges to properly integrate ESG into trade finance, Gaurav?
You're right, but it has come a long way. Now there are host of certification, independent certification agencies and banks and financial institutions, even corporates can leverage them who certify the underlying product. That's one way to embed the ESG criteria. All of them are aligned with United Nations Sustainable Development Goals and the definitions. That's one. Second, a lot of the large multinational companies are embedding their own standards for their own supply chains. And that's where fintechs, banks, and these large companies, they have to come together to see how can they actually help move that deeper into the supply chains. The standards are there. There are certification agencies. There are third parties who are specializing in that to create their own standards. That's one way. There is third pillar, which is around the end use. So very clearly, if, for example, trade financing is required for setting up a renewable energy plant, or for some other end use which is good for society, which falls within the United Nations standards, right? That's the third, which is the end use. And the fourth one is transitioning, wherein you want to transition into a particular way of manufacturing things which would help you reduce your carbon print. So those are various ways in which now ESG is finding its way into the overall trade financing. And trade financing is the start point. It will lead to all other products which we know, but trade financing is really the bread and butter, the basic thing. We buy and sell, trade and commerce, and that's where now ESG is very much getting integrated, because most of the companies have declared that they want to achieve a particular level of ESG standards by a particular time, and that's where the entire supply chain has to be aligned to that. And that's a huge opportunity for us in India, for fintechs, for banks to come together and make the difference.
All right. On that optimistic note, it's time to conclude our conversation around recalibrating trade finance for the post-COVID-19 world. And that's part of the 6th season of Standard Chartered and CNBC-TV18 present India on the Move. I'd like to thank all the panelists for joining us and sharing with us their experiences and insights on the topic. And of course, thank you to our viewers for tuning in. Till next time, this is your host, Gautam Srinivasan, signing off. Have a great day.
Standard Chartered and CNBC-TV18 present India on the Move, Season 6. Focus, ideate, innovate, enable.